Good evening, folks. Quick look at the futures before bid. It is November 19th, approximately 8:30 Eastern Standard Time. And as you can see, we're having a bit of follow through to the downside after having tested this most recent highs at around 31.24 in the regular hour session. Recall that we did have some strength in the overnight session, basically translating into a gap up in the regular hour session, which we saw a sell off right on the open, bounced around intraday, and now seeing a bit of follow through to the downside. I sent out a note yesterday to clients advising putting on some longer term protection, seeing that volatility was so cheap. And so that note seems to have been timely because we're having just a bit of follow through. Nothing crazy just yet, just down a boy, down about 27 basis points. But let's just take a quick look at some of the internals to see what's been going on. So we had a really strong couple of days in the software sector, names like Shopify, today selling off a bit. We have names like TTD, programmatic advertising, also showing pockets of strength in the software sector. That is TTD having a really nice couple weeks, to be fair. And I think all that is really led by the strength in ServiceNow, which has regained much of its former mojo, I would say, having crossed this 250 barrier, now retesting the highs of its most recent range. This is one of my favorite picks this year. Definitely is not an easy one to trade. Definitely moves around a lot. Today it gapped up and then basically did nothing much intraday, and so I would look here to begin peeling off some of the longs that we have had on, just because given the wider market environment that continues to be bullish as we are seeing rotations in and out of key sectors. Speaking of sector rotation, if you take a look at those names that are most affected by the trade war, trade headlines, trade dispute, you can see that these names are still hanging in there very nicely. So you have names like United Rentals, Deere, hanging in very nicely. Just slipped under the 10-day today. Let's see if we probably have some weakness down to the 50-day moving average at around 170.62. But I would not expect too much in the short term other than some consolidation, some digestion of those most recent gains. Um, Probably looking for more resumption to the upside once that period of digestion is done. Let's take a look at Caterpillar. Again, very similar story here in Cat, agricultural heavy equipment supplier. So, given the positive news and headline environment surrounding the US-China trade tariff, I would expect this one to continue to hold up as well. Johnson and Johnson has had its problems this year with litigation, but nicely now beginning to recover from having broken briefly beneath its 50-day. Probably call that a fake out breakdown, break back above, hold, and now off to the races, testing its most recent high at around 135. Today, overall, was a good day for biotech, which has been fairly much of a laggard as a sector this year. And so it was good to see some strength come back into this. I'm not sure if this is a sign of it having turned the corner, perhaps in some key names, but for me, this is probably a sell the strength event rather than buy on strength, given the fact that in the wider market we've been so bullish and resilient. This would not be my first pick to begin adding on strength. I would sell into strength and possibly look for the wider market to firm up on any pullback before I will look to re enter any biotech names on a dip. So Illumina is a special pick for me. I will go into that probably a bit more next week. I have a very large position on that I'm not able to disclose just yet because of doing it in a client's account. But Illumina is a top pick for me, and holding these lows very nicely at around 290. Had several tests of it, bounced back to the very top of this range around 315, and until further notice, this is probably a sell at the top of the range, but let's see if it firms up going forward. So Illumina, although being a top pick because of it being in the wider biotech sector, I would be selling on strength rather than seeking to add on strength, given again the rather elevated positions we are in the overall indices, and asymmetric risk to reward at this point is certainly to the downside rather than the up. Let's take a look at some of the rather marquee consumer discretionary names. So we have Chipotle, which has been leading the market for quite some time. All this year we've had this really nice uptrend, and it's recently just broken down from this tight consolidation between 856, a high of around 856 to a low of around 780. Confirmed breakdown, possible retest here at 780, so I would not probably be looking to sell just yet. I would be looking for a retest of at least 780 to 785 before I would look to be selling some premium on that at probably around the 810, 820 range. Looking for this to continue to build out and consolidate beneath this latest range breakdown point and possibly look for a continuation to the downside or continued strength and leadership to be shown by buyers coming back in to try to retake and retest that most recent high at around 857. We'll see how that turns out. Costco has been hanging in there, to be fair. It's a tough one to call given the fact that it's tested the highs of this range for quite some time now. And as it's done so, the range has gotten smaller and smaller and smaller. As you can see, break that down a bit. You can see we've been change this to a trend line. You can see that the range has been decreasing as we've been trying to test this all-time high at around 307. The range is forming a nice ascending channel, a nice ascending wedge. And so that typically tends to mean that we should be looking for possibly one last attempt to break the bottom of the range. Probably look for a fake out at that point and a nice sharp reversal to take out and progress to new highs. So I'd be looking definitely at Costco for a long, given the market continues to show resiliency. Take a look at some of the loggers. XOP, oil and energy has just been completely underperforming this year. OIH, no strength, very little continuation in terms of momentum, and no real low in sight. Continuing to make, I think, just about a couple of days ago, new 52-week lows. And so oil is definitely one to keep on the radar because we would like to see signs of a bottoming formation begin. But at this point, I am not holding my breath. Much better to look for pockets of strength and seek to buy those on dips versus trying to catch a falling knife in oil and energy. Let's take a look at some of the tech names. Google. Oh, Google can be sometimes a very frustrating one to trade. Because of its large size, you tend to find that it gets moved around by institutions one or two times every 2 or 3 weeks. And so if you're an active trader, Google definitely is one that you have to be patient with when setups occur. You can see here we had a nice setup testing this most recent breakout high at around 1290. It came back into tested more than a couple times intraday here on last week Tuesday, and then began to show pockets of strength as the week went on, which led to this breakout to this new high here at 1333. We have a nice little orderly pullback, which some may consider a bull flag off of this most recent structure. So if that were to be the case, we'd definitely be looking for at least the 1305 level to hold to give us an opportunity to go long, looking for a retest of this most recent 1333 high and onwards from there. Amazon has been the laggard in tech for a bit and definitely needs to get going here, or we can quickly see 1700 on any further weakness in the market. You can see this is a nice tight consolidation range here. And once again, we broke down into it, and as of now, we've popped back up. Let's see what happens in the ensuing days, whether we continue to build value out at the very bottom of this newly established range, or do we sink back into this consolidation again, targeting 1700 at the bottom of the range? But at this point, I would not be getting too bearish on Amazon. I would be looking for a long if it does get down to that 1700 area, looking for a move back into its intermediate highs at around 1815, and then possibly setting up for next year to retest its all-time highs at 2050. This is a leading name, strong name, great institutional support, and so I would not be getting too bearish. I'd be looking for buying opportunities, especially given that the ranges have contracted really nicely, which shows that there is no real uh, selling pressure. It's more of an orderly sell-off as opposed to someone trying to liquidate and get out at any cost. And so Amazon is definitely one to keep on the radar. Netflix, let's see what's good on this. Netflix finally reclaimed this 300 level. Let's see if we can get some momentum going as a result of having broken that level. I would definitely be targeting in the short term the highs of this structure here at around 335. Again, Netflix probably will need some wider market momentum. So probably expect some bouncing around between this 305 and 295 level to build up some energy for that run into 325 and 326. Netflix definitely want to keep an eye on, especially if the wider market experiences a shallow pullback. I would definitely be looking at Netflix going forward. Tesla's been quite the mover for the last, I would say, 2 weeks or so. Quite the mover. And this is why you have to look for opportunities when the baby gets thrown out with the bathwater, when there is a slew of negative news headlines that do not essentially have anything to do with the fundamental story or growth prospects of the company, because Tesla gave so much opportunity down here between 211 and 240 for people to get long, and not until it was probably too late after it gapped up over earnings. You had a lot of chasing, probably some short covering in there as well. You had a nice little rounded consolidation here before it continued on with this upwards press. I think this is probably a 52-week high on Tesla. Yeah, 52-week high on Tesla. Looking to test these highs here. All-time highs back at 384 4. So we'll leave it there for this evening. Definitely, if you have not, in terms of your 401k, your longer term portfolios, with volatility this cheap, with the S&P this resilient, it is the best time to buy insurance for your portfolio when it is cheap, not when the house is burning down. So I definitely invest in some portfolio insurance at these levels. All right, guys. Cheers.